want to go over some of the number one reasons why a lot of new day traders seem to fizzle out of the markets and why you guys continue to fail. If you're new to the markets, you come across headlines, you come across posts, you come across videos like this. How this trader turned $200 into $190,000 in 4 hours. Can I turn $5,000 into $1 million? How this trader turned $300,000 into $10 million. Trader builds $5 billion position after realizing something. How to turn 5,000 into $1 million. How to turn 5,000 into $1 million. Again, this trader turned 30,000 into 80 million. This trader turns $1,500 into 1 million in 3 years. Now, am I here to say that these traders did not do that? Of course not. I don't know who these traders are. Are these just clickbaity titles? Are these just, an incentive for you to go out there and follow them or watch their videos? I don't know. But the problem that a lot of traders have is they see things like this. So they want to get into the industry. They want to get into the business. They have this thought process. Well, if someone turned 5,000 into 1 million, I would love to do that. Well, this trader turned $1,500 into 1 million in 3 years. I can do that as well. The odds and the probabilities of you doing that are slim to zero. Okay, slim to zero. I'm going to give you the harsh reality. Okay, I'm going to give you the harsh reality of what a real day trader is going to explain to you. I have been trading the markets for over 8.5, going on 9 years, coming up in 2024. I have been a full-time trader, meanings where I have to eat, bleed, sleep, live this day trading to pay my bills, to pay my mortgage, my car payments, to feed myself, to take care of my family, so forth and so forth. This life is not that glamorous. This life is not that exciting. I wake up every day. I do the same thing every single day. I look at the same handful of stocks each and every single day. I wait for specific levels to either get taken out or get confirmed each and every single day. If I get the opportunity based on my setup and my strategy, I take the trades. Sometimes I win, sometimes I lose. I come back tomorrow and I repeat the process. What makes you successful in this business is having access to a lot of capital. Now, trading has definitely come a long ways in the last 8.5, 9 years since I started. You have the opportunity to take advantage of what are prop firms, where you can take, funded or evaluation challenges, proving that you can manage risk, proving that you can hit a profit target, and they're going to give you access to leverage to trade, right? Whether you are trading the live markets or not is none of your business, none of your concern. 99% of prop firms that are out there, these challenges that you see, you're trading a demo account. Don't get hung up on the fact that you're trading a demo account versus a live account. There's no difference. If you can prove that you can make money, these companies will pay you. Okay, they're going to pay you. I have personally got paid out. I know other traders who have personally got paid out. They are not scams. They're not here to just take your money. However, they are built on people like you who are going through headlines like this that I just read to you. Traders who want to take $5,000 to $100,000. A trader who wants to buy a prop firm evaluation, get funded on a $50,000 account and take that to $500,000. Those are the people that they're preying on, because those reset fees, those activation fees, those sign up enrollment fees is how they make their bread and butter. Because the truth of the matter is, in the prop firm space, 99 or 98, 97% of traders fail, and they blow their accounts and they put more money in and more money in and more money in. What you have to do is outsmart the prop firms. And how you outsmart the prop firms to actually get paid out and to actually build a business around that is by treating them as a business. This is a business. What are you willing to risk on these prop firm evaluations? Is it $500? Is it $1,000? Is it $200? Is it $50? That's ultimately your risk. So for example, I'm going to paint a little bit of a picture. Let's say you're someone who maybe you want to go out and you want to try one of these prop firms and you want to invest $50 potentially to get funded a $50,000 account. If all you have is $50 and you're very concerned about that $50, you don't want to lose that $50, you want to make that $50 stretch, then by all means, you need to trade one micro contract. You need to look for anywhere between 1 to 3 trades a day. Depending on if you win or you lose, you need to stop trading after 1 to 3 trades. You don't want to overtrade. You want to aim to make, $40, $50, $60, $100 a day. The same thing on the losing side. If you lose $100 a day, you want to kind of stop, and you want to take all the time in the world to try to pass that evaluation. However, once you do get into a funded account on that type of size, you have to also remember your investment was only $50. So how much are you realistically looking to flip that one $50 investment, right? If you're able to take out $500 in the next 30 days, investing just $50, would you say that's a good return on your investment? I would say 1000% it is. But most traders' mentality, because they see headlines like the ones I just read to you about a trader turning $1,500 into $1 million, and this is on CNN, about another trader on Investopedia that has turned $5,000 into $100 million, you think that the expectations are that easily obtainable. So when you're up $300, $400, $500 on your $50,000 prop firm account, or your $50 investment is not anything to kind of write home about, I need to stop you and let you know that it is something to write home about. And if you do want to make more money, all you have to do is scale what you're already doing. You need to scale that business model. And what does that mean, to scale that business model? It means that you need to go out and grab a second $50,000 account, or a $100,000 account, or a $25,000 account, whatever it is that you're trading. I would definitely recommend that if you're going to go out and get $50,000 accounts, you're already familiar with that type of drawdown. So I would just keep all of your accounts at $50,000. I'm not going to go get a $100,000 account, a $25,000 account, a $300,000 account, because the drawdowns are going to be all different. You have to trade them different. I want all counts matching. That way I can trade them all the same, and I'm already familiar with the risk that I'm putting up per trade on these type of accounts. I hope I'm not losing any of you new traders. But the number one reason why a lot of traders fail is because they stumble upon the lifestyle marketing traders. I'm not saying that those type of people who are marketing the lifestyle of, the nice cars and the watches and the trips and the headline stories on CNN, where these traders are turning extravagant amounts of money into extravagant amounts of money. What I want you guys to focus on is that those goals can be obtainable, but it's going to take a long time, or you need a lot of capital to be in the market. So a lot of times the people who are looking at that type of content don't have the most amount of capital to invest in the markets to be able to make those kind of returns. And those kind of returns are a dime a dozen. There's a story floating around on Twitter right now on a smaller cap stock. I think it's IMND or something along those lines, where they were able to take out thousands and thousands of dollars on this one particular play on a big squeeze or a big open or something like that. Those type of headlines and that type of mass hysteria, once it starts spreading out in the wild in social media, starts to get people to think that they can do it too. That maybe if they find just the right stock, it'll happen to them. And when you do that, it takes you down a slippery slope of just this hamster wheel effect of the same outcome each and every single day. Remember what I said in the beginning of this video. This business is not exciting. It does give you the luxury to trade when you want, to set your own hours, to be able to spend more time with family or a significant other, or provide you an opportunity to have an additional income if you already have an existing 9-to-5. It does provide those opportunities. 100% it does. However, there's always a however. You need to understand what it actually takes, and how you're going to understand what it actually takes is by doing. So you need to get out there in the markets and start doing. If you don't have any capital available to yourself to put into the markets, you need to reach out to these prop firms and sign up for the evaluations and go through these combines, go through these trial periods where you prove yourself that you can be profitable. The best advice that I'm going to give to you is don't rush. If you're a completely brand new trader, do not rush. If you're a trader who's made some money in the past, you've got a little bit of scratch in your pocket, you're willing to put down $500, $1,000 to potentially get, 2 or 3 or 4 funded accounts, and you've got that cushion and you're okay with it, I would definitely go out there and spend $500 to $1,000. I would put that money into these evaluations and I'd buy as many as I can, because remember, each prop firm cost a different amount of money to get started. So however that breaks down between that $500 to $1,000, and then I would go out there and try to aggressively pass them trading around 1%, 0.5 to 1.5% per trade. We want to get through those evaluation processes very, very quickly. We want to wait for our ideal setups, and we want to have a clear risk management plan set in place. So make sure you are working on something. You do have an overall trading plan. That's what I do at Evolution Traders, is try to work with traders to build and develop a trading plan so they can take it into these evaluations, or they can take it into their personal accounts and better suit them, better help them. But again, get off of social media. Don't worry about what the next guy is doing. Don't worry about what you heard someone pull out from a prop firm. Don't worry about some hot stock that someone found where they had $10,000 sitting in there and it explodes next week and they made $300,000. Those opportunities are like winning the lottery. Do people win the lottery? 100%. It happens every single day. It happens every single week. It happens all the time. You hear stories of people winning the lottery. You hear stories of someone going down to the casino and they hit a $25,000 jackpot. They hit, a $5,000 jackpot. They hit a $50,000 jackpot. It happens. But just like these stories that you read, or these headlines that you see, or these marketing style traders where they saying, can I take $1,000 to $10,000? Can you? Probably, if you've been in the markets a long time and you understand risk management and what you're looking for. But the odds and the reality of someone else following that kind of mentality and thinking that they can put $1,000 in and make $10,000 this month is probably slim to none. They don't have the market experience. They don't have the education. They don't have the right guidance. They don't have a mentor. They don't have a trading community or a trading buddy that can call them out on their bullshit when they're doing something wrong. They don't have the discipline yet. They don't have the emotional tolerance yet. So they're so bright-eyed and bushy-tailed on what could happen that they're overlooking everything that's going to happen to them. Taking losses, getting into drawdown, mismanaging your risk, choppy environments, news-related headlines that go against you. All you're fixed on is the profit. You're not fixed on all of the potential downside outcomes that can happen. I would definitely recommend, if you want to get into the market, start slow, start small, get around a good team, get around a good community, get around a good coach, a mentor, somebody. You have to learn from someone who's already done it. You have to learn from someone else. I cannot go out there and be a carpenter and build custom built cabinets for somebody's kitchen tomorrow. I have no experience. But if I want to learn how to do that, what do you suggest I do? Go to the best carpenter or to a good carpenter in town and learn from that person. Okay? If I don't know how to, work on a car, am I going to go out there and take a wrench and a hammer and a screwdriver and just start plugging it in everywhere? Of course not. I'm going to go to a mechanic and I'm going to have someone show me how to work on a car, how to change the oil, how to change the tires, how to check whatever you want to check, right? So you can't just go at these things alone. You need to learn from somebody. And learning doesn't necessarily mean going onto social media and reading about other people who are doing it. That's a big problem that I see happening, is that you seek out other people who are showing what they've already done, and you're in turn thinking that you can do it too, versus they did not show you anything other than the end result. But how did we get from here to the end result? I hope this makes sense to you. If it does, make sure to like, comment, and subscribe. If you guys want to join Evolution Traders, where you can get access to my strategy courses, you can get access to live trading, you can get access to my calendar where we can set up one-on-one coaching calls to build out a personalized trading plan, understand risk management, understand mentality, understand market structure, and a strategy that's going to work for you. Definitely join. I've got one space available before the end of the year. That link is down in the description box below. I'll catch you guys all in the next video.